Have you ever imagined investing just $120 per week and, in the future, having enough money to pay your bills without relying on your current job? And what if I told you that there is a simple and automatic strategy that can turn small contributions into a solid source of passive income? If you are between 25 and 40 years old, tired of living just to pay bills, and want more freedom to travel, start a business, or even work less, this video is for you. Today, I'm going to show you how SCHD, one of the most efficient dividend ETFs in the US, can be the key for you to escape the rat race and start building an income that covers everything from rent to your dream vacations. Stay with me until the end, because besides explaining how this strategy works, I'll show you real simulations of how much money you can generate with just consistency and patience. Let's get straight to the point. So, go ahead and like this video and subscribe to the channel so you don't miss any practical tips like this one. Most people live in a cycle that seems never-ending: work, pay bills, and wait for the next paycheck. It's an exhausting routine that often makes us feel like we are running on a treadmill, going nowhere. Have you ever felt this way? Like no matter how hard you try, your money is only enough for the basics? What nobody told you is that there is a smarter and lighter way, but few people know about it. Creating an automatic income source that works while you sleep. And the most incredible part: this strategy isn't just for millionaires or finance experts. With discipline and a well-structured plan, anyone can start today and change the way they handle money. If you're enjoying the content, click the like button and let's move forward on this journey together. Now, let's get straight to the point. What is SCHD, and why can it be the key to your financial freedom? SCHD is an ETF, meaning a fund that invests in dozens of giant US companies, all with a solid history of paying dividends. We're talking about companies like Coca-Cola, Pepsi, and Verizon, companies that have been generating profits for decades and distributing part of those profits to shareholders, in this case, you. The key advantage of SCHD is its consistency. It focuses on companies that not only pay dividends but also have the ability to maintain and increase those payments over time. And the best part, it's all automated. You buy shares of the ETF, and without having to choose individual stocks or worry about financial reports, you start receiving dividends directly into your account. Go ahead and subscribe to the channel right now because, in the next videos, I will detail other ETF strategies that generate passive income just like SCHD. But you might be wondering, how much can $120 per week really generate in the long run? Let's run a realistic simulation. If you invest $120 per week in SCHD, about $480 per month, and maintain this discipline for 10 years, with an average return of 7% per year considering both dividends and appreciation, you could accumulate approximately $85,000. And that's without reinvesting dividends. Now, by automatically reinvesting everything the ETF pays you, this amount can easily surpass $100,000. And the best part, this sum can generate a passive income of $300 to $400 per month just in dividends. Imagine having that amount hitting your account every month without working an extra hour. And if you extend this strategy to 20 years, the scenario becomes even more exciting, with the potential to accumulate over $250,000 and generate a monthly income of $1,000 or more. That means covering rent, bills, and still having money left for leisure or extra investments. Hit the like button if this possibility is already blowing your mind. Now, think with me. How would your life be if your fixed expenses were already covered before even receiving your paycheck? Imagine covering rent, electricity, internet, groceries, and still having a reserve for travel or emergencies, all with SCHD dividends. It's possible, and many people are already doing it. Stories of ordinary people who started small, making weekly or monthly contributions, and today live partially or entirely on passive income are more common than you think. The real transformation isn't just financial, it's a lifestyle shift. You gain more freedom of choice, work less, travel more, or even invest in new personal projects. And you? What would you do if you had an automatic income of $1,000 per month? Comment below with your dividend goal and subscribe to the channel because I have many more practical tips coming. But wait, it's important to know that there are pitfalls along the way. Many people give up or lose money by making basic mistakes. One of the most common mistakes is a lack of consistency. They start excited but stop after a few months. Another mistake is panicking during market downturns, something natural and part of the game. There are also those who chase sky-high dividends in risky companies without considering the quality and stability of the businesses. That's why the secret is to stay disciplined and follow a safe strategy, like consistently investing in SCHD, which has already proven its resilience across different economic cycles. Automate your contributions and adopt a long-term mindset. This is the mindset that separates those who achieve financial freedom from those who fall behind. Hit the like button to support the channel and help more people learn these valuable tips. Now, let's get to what really matters: how to put all of this into practice simply and quickly. First step: open an account with a reliable brokerage that allows you to invest in US ETFs. Then, set your weekly or monthly commitment. $120 per week is a very efficient amount. Set up automatic contributions so you don't rely on willpower, and every week, buy shares of SCHD consistently. And don't forget to activate DRIP, which is the automatic reinvestment of dividends. This boosts your results even more. Want a bonus tip? Review your contributions every 6 months and increase the amount whenever possible. The earlier and more disciplined you are, the greater the impact in the long run. This routine will become your personal machine for paying bills stress-free. Go ahead and subscribe to the channel to make sure you receive more strategies like this in the upcoming videos. When we look at SCHD's history during times of crisis, such as the 2020 pandemic or even market downturns in previous years, we notice a fundamental characteristic: resilience. Even during periods of high volatility, SCHD managed to maintain solid performance, with high-quality companies that continued to pay consistent dividends. This shows that SCHD is not just an income-generating tool but also a way to protect your wealth during difficult times. And believe me, the discipline to keep investing even when the market seems to be collapsing is what separates those who achieve financial freedom from those who give up along the way. By the way, if you're enjoying these tips, make sure to like this video and subscribe to the channel so you don't miss the next videos on how to protect and grow your money. Many beginner investors ask, why SCHD and not another dividend ETF like VYM or HDV? The answer lies in SCHD's composition and strategy. Unlike some ETFs that select companies solely based on their size or dividend payment history, SCHD focuses on quality. It selects companies with strong fundamentals, high consistency in payments, and significant potential for dividend growth. Additionally, SCHD's management fees are extremely low, which means higher long-term returns. Compared to other ETFs, SCHD offers a powerful combination of security and profitability. And if you want to receive more practical and comparative content like this, go ahead and like this video and subscribe because there's much more coming. For those who want to go further and truly boost their passive income, combining SCHD with other assets can be a strategic step. Imagine pairing SCHD with international ETFs, such as VYMI, which distributes dividends outside the US, or even sector-specific assets like REITs, which are US real estate funds. This diversification not only increases your global exposure, but also smooths out risks and enhances your gains in different economic scenarios. This hybrid strategy could be the key to reaching financial freedom even faster. Did you like this idea? Then make sure to like this video and subscribe, because I'll be detailing more of these strategies in the next videos. Now, imagine this. Instead of receiving dividends only in certain months, what if you could build a real dividend ladder that pays you monthly? This is possible by combining SCHD with other ETFs or stocks that have different payout cycles. For example, some companies pay dividends in January, others in April, and so on. By structuring this ladder, you secure a steady monthly cash flow that can be used to pay fixed expenses such as rent, electricity, or even travel. This technique is especially useful for those who want to completely replace their work income. If this tip made sense to you, make sure to like this video and don't forget to subscribe to keep learning how to build your financial independence step by step. Not everything is perfect when it comes to dividends. There is one important factor that few people mention: taxes. For international investors, dividends paid by US ETFs like SCHD may be subject to a withholding tax of up to 30%. But there are smart ways to minimize this impact, such as investing through brokers that allow tax optimization or even using tax treaties between countries. It is also essential to understand how to properly declare these dividends in your country to avoid issues with tax authorities and maximize how much you keep. Reinvesting the dividends received from SCHD is one of the most powerful ways to accelerate your path to financial independence. Instead of spending the amounts received immediately, reinvesting allows the famous snowball effect to work in your favor. Every dollar reinvested increases the base that will generate future dividends, creating a virtuous cycle of exponential growth. With discipline and patience, this strategy can double or even triple the value of your passive income in less time than you imagine. There is nothing better than real-life examples to inspire us. There are countless cases of investors who, over 10 to 15 years, accumulated significant positions in SCHD and now live off dividends. Ordinary people who started with modest monthly contributions and, with consistency and focus, achieved geographical and financial freedom. These stories show that you don't need to be a millionaire to benefit from the power of dividends, but rather have patience and a well-structured plan. Many forget that inflation is a silent enemy of financial freedom. Money sitting in a bank account loses value over the years. However, SCHD invests in companies with a history of consistently increasing dividends, which helps protect your purchasing power. Strong and resilient companies tend to pass inflation onto their prices and keep profit distributions growing above inflation over time. This makes SCHD an excellent tool for shielding your passive income from inflationary erosion. Consistent investing requires more than just money, it requires the right mindset. In times of crisis, the temptation to sell everything and give up is strong. But those who stay focused and continue investing during downturns reap the best rewards when the market recovers. The discipline to keep contributing to SCHD, even when the headlines scream crisis, is what guarantees success in the long run. Focus on the long-term vision and keep your strategy intact, always remembering that financial freedom is a game of years, not months. Finally, an important question. After SCHD, what's the next step? The answer lies in smart diversification. Once you have a solid base in SCHD, it's time to think about other assets like international ETFs, global real estate funds, and even fixed income securities that protect your wealth across different geographies and sectors. This creates a robust, crisis-proof portfolio while accelerating your early retirement plan. The key is to plan clearly and maintain consistency in your contributions. And if you want me to create a detailed video just about this diversification, go ahead and like this video and subscribe now so you don't miss the exclusive content that's coming. A woman named Emily, a 30-year-old American, always had an interest in finance but never really knew where to start. Working as a digital marketing analyst at a large company, Emily had financial stability but never felt like she was truly growing financially. She saw herself stuck in a cycle of monthly expenses and limited savings, always postponing the moment to start investing seriously. Until, in 2018, she had a life-changing conversation with a friend who was an investor. He suggested that she look into the SCHD fund, Schwab U.S. Dividend Equity ETF, which stood out for its combination of steady growth and strong dividend returns. It was a simple but effective investment strategy that many long-term investors were adopting. Emily, initially skeptical, decided to take his advice and invest a modest sum of $10,000, believing that even if it wasn't a fortune, it could be a good start. In the first few years, she kept her investment in SCHD with a long-term focus. She understood that the stock market could be unpredictable but knew that the key was to stay calm and be patient. Emily made an additional contribution in the second year, adding another $5,000, and continued to allocate a portion of her salary every month into the ETF. As time passed, she began to see the impact of her decision. Over the next 5 years, Emily's investment value increased significantly, but what impressed her the most was the dividends that started flowing into her account. This steady stream of dividends not only helped her cover some extra expenses, but also gave Emily a sense of financial security she had never experienced before. In 2023, after 5 years of investing in SCHD, Emily decided to sell part of her shares to lock in a substantial profit. Her total return on investment was around 80%, which, considering the short period and passive strategy, exceeded her expectations. She was amazed by the growth she achieved with such a simple investment, without needing much time or knowledge to manage it. Emily's success was not just financial but also emotional. She now felt more confident, with a clear vision of what the future could hold for her, and she knew that her journey was just beginning. She continued investing, diversifying her portfolio, but SCHD always held a special place. The most valuable lesson she learned from this experience? Start early, stay consistent, and trust the power of dividends. In the end, Emily not only managed to significantly increase her wealth but also gained something that money can't buy: freedom. freedom to make decisions with more confidence, to travel, to invest in new projects, and even to think about retirement with much more peace of mind. Just 5 years of investing in SCHD transformed her financial life and, more importantly, her mindset about what is possible to achieve with patience and discipline. Before we wrap up, I want to emphasize something important. You don't need to be an expert to achieve financial freedom. What you need is a simple, automated plan and, above all, consistency. Investing $120 per week in SCHD may seem like a small amount now, but over the years, it will become a game changer in your financial life. You'll have more peace of mind, more time, and less stress about paying monthly bills. So, why not start today? If this video helped you understand the power of a simple and effective strategy, go ahead and like it, share it with your friends, and subscribe to the channel to follow exclusive content on personal finance and financial freedom. In the next videos, I'll show you other ways to automate your passive income generation and speed up your journey toward financial independence even further. See you in the next one.